Well, what is happening with economics? News, I hear good news, I hear bad news. I don't know what news to believe. Jeff Sargent, president of ONB, Residential Mortgage.
The good news is we're in Oklahoma, I think, Darryl, which we talk about a lot, but California has 47.5% more foreclosures than they've ever had. And you think that's because of some bad loans and an inflated market? Maybe?
Big stuff that's happened this year, countrywide. The nation's largest mortgage company. Is that true?
That's what I hear.
Bought by Bank of America?
Yeah, I think they had to do that to forestall losing another $11 billion or so. I
Bank
think
of America
they didn't have a
injected
choice.
Money into countrywide.
Big investor.
Right. So they're basically saving their own investment.
There was a lot of controversy. I think the CEO of that company wanted to take out maybe $117 million, and I think there was some controversy maybe with that. So I don't think we've heard the end of that.
Wait a minute, take out $117 million.
As part of his severance package.
Bonus. Oh, sure.
His severance package.
Yeah, I've almost bankrupted the company, so there obviously I should get $117 million.
That's a nice golden parachute.
We haven't heard the end of that. Then it went down to $37.5 million, but you have to remember he still owns 500,000 shares. So I think he's still got a little piece of the pie to take, because that company will stay afloat, I'm sure.
Yeah, I don't think the government would let that go under, do you?
I always get bonuses when I don't sell houses. I mean, that just is very logical. What do you think?
I don't know, Darryl. That doesn't sound too logical. But I think, you know, the good thing is in Oklahoma, as Neil will tell us, commercial real estate is actually up 175% in this state. And that's because rates are coming down, enabling builders, investors to do more. Is that right?
Well, I'm glad that you brought up the area of economics.
I thought I'd open the door.
Absolutely. And I heard a great quote, and I may be getting into the segment, a great quote from a broker friend of mine in California that said, "I can't wait till this market gets worse so I can start closing more deals." I said, "Well, tell me what you mean by that." He goes, "Well, we've had such a great market up until this point.
People don't know to appreciate it."
Well, we've had such a great market at this point that, especially on the coast, where his point of reference is from, is that property values had gradually come down. And the seller, or the owner of the property, doesn't want to concede to the fact that his property value should be lower. The buyers don't want to pay the higher price, and so you're at a standoff. Okay, so the transaction's not getting done. That in combination with, even though the rates are lower, the underwriting guidelines are a little bit harder to get to.
Yeah, there's a lot of loan programs that are gone. And effective March 1, there will be a lot of tightening on credit scores and the way that people do business.
But Jeff, when you're talking about that, it makes people think that there aren't good home loans anymore.
There's a lot of good home loans out there. There are still products that if you have good credit, you can do about anything you want. All they're doing is tightening up and getting rid of the crazy stuff that caused this debate.
That we never should have had in the first place.
Shouldn't have had.
We had entire shows.
But the tightening of that, we've had those crazy loans in the past, which more buyers were brought to the marketplace, therefore fueling this buying frenzy.
That's spending on credit. You can enjoy that for a little while, but 6 months later, when the interest starts to just eat you alive and you can't even make your minimum payment, that's when it really shows up.
Right.
And so it wasn't good long-term for us.
And the correction is that they're tightening the guidelines right now, which makes the money a little bit harder to get to, so you're eliminating a segment of buyers that once were buying.
I mean, the economy is just like balancing your own home budget, and getting out of debt is twice as difficult as getting in it. Actually, 10 times as difficult. I mean, and that's what we're doing right now. We're cleaning up a mess that never should have been here had we shown some restraint and not made such crazy decisions.
We're spending $10 billion a month, I hear, on a war effort. And then we have the government talking about $150 billion infusion of cash into the economy because we're desperate. And these desperate times were brought on by these people.
What is this? What is this? We're going to borrow money. I was listening to talk radio, my favorite thing to do. Borrow money from China so we can give everybody a tax rebate?
Yeah, China's buying our debt.
Smart.
Here.
Really smart.
Yeah. Well, I mean, as far as the commercial real estate market goes, I talked with another guy today here locally, and we both agreed, like, transactions are still coming. People are still buying and selling and leasing here in Oklahoma.
Okay, but now, is this an artificial market? I don't like, I mean, this is really thin ice here, because I don't want to set off this this self-fulfilling prophecy that we start talking about something that doesn't exist and then we make it happen.
The entire economy is facing some challenges here. The coasts are facing one, massive depreciation and people that are foreclosing on properties, and tighter lending guidelines. We're only facing tighter lending guidelines. There's no bubble popping here, but we are seeing some people trying to buy property that can't qualify for it now just because the money's not there to lend. And so that is going to decrease. We are going to feel the effects of that. We're going to lag behind the coast, but we will.
Putting on the brakes slowly is really a good thing. It allows businesses and homeowners a time to adjust.
Correct.
And to make good decisions that can keep it afloat. You know, most of the time when I'm speaking to new realtors, I always tell them what really matters is not that you're the best, the highest salesperson the first year or two in your business. It's just that you last. And if you can outlast your competition, you won.
Right.
And so you over that time, you're building expertise, and you're doing much better each and every year. And it's really the same thing here. What really matters is that you stay afloat and you don't make too much of a swing one way or the other, take on too much debt, or get more house than you should be having. You know, that's our problem. We're hungry for debt.
Yeah, and I agree. And I think that that the lending market, as Jeff can probably testify, is catching up with that and saying, well, we're going to go ahead and tighten the restrictions just a little bit. And those good lenders, or the good buyers, those with great credit scores, there's money to be had, and it's cheap money too. Still a great time to buy if you can qualify for it. Where we run into problems on our side is trying to find somebody, for example, maybe someone right out of college that is in the medical practice, trying to get financing to establish their own business.
There's no history there.
There's no credit history there, and they've got nothing to use as collateral. What do you do about that?
What do you do about that for a young business owner who needs to establish credit and is probably still a good credit risk?
You know, there's a couple alternatives, and we've been kind of down this road in the last couple months. You know, you look for what kind of collateral that they would have. Is there anybody there, maybe a parent or a relative, that could co-sign for the loan? If none of that is available, we're probably not buying a new property. We're probably going to lease. And you get in for 3 to 5 years, you establish your practice. Now you've got a track record that some lender can say, okay, well, you've established your business, and now we can go in and we can help you buy that property.
And of course, this is a good description of why it's important to have a good relationship with your banker, so that they know who you are. They're sitting down looking at the risk that you are and know that you're a good risk. 258-2600, Neil Dailey at Baskin Daily Commercial. It's a part of McGraw Realtors. Or 481-6833 if you need to talk about some loans. Talk to Jeff Sargent, president of O&B Residential Mortgage. When we come back, more with Jeff. What we didn't answer on the last program, that's FHA and bond loans. What do these mean to consumers, and who should be getting them and asking for them? I'm Darryl Baskin. We'll be back right after this.